Hello and welcome to the next installment or the most recent installment of PwC webinars conducted in English for our English-speaking friends, clients and counterparts. Today's meeting will cover, as usual, the newest developments, the newest changes in the Polish corporate income tax regulations, which is mostly the topic of our meetings. Today I am joined by Michał Jagielski from our international taxes team, and my name is Marcin Jaworski, as you might recall, since I'm most often the participant of these webinars. So hello, Michał.
Hi.
Today we will have the pleasure of introducing to you the changes which are coming in the year 2020. I will venture and say that they are not as revolutionary as those that we have been discussing in previous years during our previous webinars. However, there are some very, very important changes to perhaps some smaller areas of corporate income tax regulations, and we'll be happy to present them. Of course, as usual, there is a chat room during our webinar, where we invite you to ask questions, be it in English or in Polish language, and we'll be trying to answer them during the course of our presentation. We will also, as is the usual custom during these meetings, have some questions to you, which hopefully you will answer, and then we will discuss them so that we can together draw some meaningful conclusions, and that the participation is not as one-sided as the webinar means of communication usually allows us to be. Okay, so we will have a couple of key topics to discuss. The first one will be about changes introduced to the law regarding bad debts, which have been identified as one of the key problems to the Polish economy, and this is the second attempt at regulating these issues from the tax point of view. Then Michał will be discussing withholding tax and notional interest deduction changes and their full entry into force, as well as the anti-avoidance tax directive part 2, which will also be handled and led by Michał. Then we'll briefly touch upon the changes into the APA regime, which are not that significant, but formally there are some points worth raising, and we will follow with I think something that is very new, very forward-looking from the perspective of the Polish Ministry of Finance, at least in its assumption, which is the cooperation agreements between taxpayers and tax authorities. And we'll finalize with a topic that is partly related to VAT, but also has some corporate income tax impact, which is the VAT whitelist and its impact on tax-deductible cost. So I think without further ado, we can move forward to the question that we have for you. The question is basically a consequence of this whole series or this whole program of webinars in English, during which we have mostly discussed transfer pricing changes, which were sweeping and which were happening every year for the past couple of years. We were also very thoroughly covering the deductibility limitations for intangible services, which we also thought, and we know from you as well, that they have been a topic of much discussion, much controversy, and a lot of work for all of us. And the last of the key topics, I think, from the history of these webinars were withholding tax changes, which were also prominently featuring in our past meetings, past encounters. So to have also a better feeling what you find important, what you found more important from our past meetings, and what could inform us for the future, we decided to ask this question: which of these changes were most significant for you? And I think we are ready to show the results of the of this question, of the questionnaire. So I think that we can clearly see that we have correctly identified the key items, key elements that were most important for you. We have transfer pricing and withholding tax as the key elements. The withholding tax changes being the most important. I think also they are still the most current ones, and their full entry into force will happen next year. So this is why we are also mentioning again prominently this topic this year and during this webinar. Okay, so I think we can now come back to the main points of our today's meeting. We'll start with bad debts and the fact that for the second time the Polish tax authorities, the Polish Ministry of Finance, has decided to somehow handle or deal with this issue, which is not a surprise to anyone who has contact or who functions in the Polish economy, that lack of payment in due time is very often a significant problem for a lot of Polish companies, a lot of Polish businesses. The previous attempt was, I think, not the most successful, let's put it this way, and that's why it was withdrawn after a couple of years of functioning. I mean, the historical Article 15b, which handled this issue and created a lot of problems, especially for entities with longer terms of payment. It was also rather complicated in terms of including or excluding particular items from tax deductible costs and treating them as revenue due to the very specific rules regarding depreciation. This time the mechanism is a lot simpler. Basically, after 90 days, after the date of the due payment, taxpayers who have not received the payment and who have not received the payment within 90 days after the payment's deadline, they will be entitled to decrease their tax revenue. And on the other hand, the entities which have not paid the amounts due within 90 days after the payment's deadline, they will have to lower their tax deductible costs. So the mechanism is much simpler, and it doesn't put the very strong emphasis on having to pay everything within 90 days as it was previously. Rather, there is the time limit of 90 days after the payment's due date. So, for instance, if there's an entity having 120 days standard payment terms, for instance, due to the characteristics of their business, it will still be 120 days plus 90 days, and only after that period, the respective changes in tax deductible costs or in tax revenue will have to be made. So it seems that this particular issue is handled in a simpler fashion. Whether it will have the intended impact, of course, only time will tell. I think what we all can say right now, that this is not a panacea for this particular issue, but it might hopefully help with the lack of payments, which is quite an issue in the Polish economy. So I think this is enough in terms of the bad debts relief or bad debts treatment in the new regulations in 2020. And now I will hand over to Michał for the withholding tax issues. Of course, if you have any questions regarding the bad debts or any other items, please ask them on the chat.
Yeah, thank you. Now around withholding tax. You may know that changes with regard to withholding tax may be seen now in 3 dimensions. First one is the most obvious, changes in the legislation, part of which has been already introduced in 2019, part of which will be introduced from 2020. And later on, I will concentrate mainly on the second part. Second item are the guidelines officially issued by the Ministry of Finance. They are still in draft, but they are providing some idea of how the ministry wishes to play the new rules. The guidelines also showed that the withholding tax may be at a tension point for the next few years, as well as the third item, which are the actual tax controls and plans on tax controls publicly available on the websites of the Ministry of Finance. And maybe I will start with the last item because I think this is the least known on the market. Well, withholding tax has been announced last year as one of the top priorities for the tax authorities and one of the sources of revenue of the Polish budget. It's clearly mentioned in the guidelines for the tax authorities, and there is a very concrete amount that has to be collected within the tax controls. Now, this changes the environment because I would say that until maybe a year ago or 2 years ago, withholding tax controls or tax audits were very simple. They were aimed mainly at verifying if the tax remitters have sufficient formal documentation to apply relief from withholding tax or a reduced rate. This has changed a lot, and now we have full tax controls, full tax audits. They are very concentrated on beneficial ownership issue. The tax authorities are quite aggressive around the withholding tax items, and they are involving taxpayers or tax remitters on the Polish sides into an actual discussion around the structure, putting much attention on goals and putting much attention at verifying if the structures within which the payments are made from Poland were tax-driven or not. So this is a complete change of the environment. Now, the legal environment we have starting from 2019 has changed. There is this basic rule which says that you should apply different treatment to payments over 2 million zloty and payments below 1 million zloty. But this is somehow misleading. The rule says that every time you pay to a non-resident, you should apply appropriate due diligence to check if your counterparty should be treated as a beneficial owner of the payment, whether the situation is anyhow related with tax-driven structure, and whether it's clear to you to whom you are paying and why the structure on the side of the payment remitters looks as it is. So even if you are paying below 2 million, and even if you are paying or have already paid something in 2019, you should apply appropriate due diligence. You should be aware at least about some most important circumstances and at the side of the payment recipient. Basically, the tax authorities are taking the view that payments to related entities should be subject to a greater attention, and this is because they assume a greater transparency to the Polish entity processing the payment. So every time you are paying to a related entity, you should apply more due diligence, you should collect more information, because if you face the actual tax control, the outcome would be that the tax inspectors on the side of the tax authorities would assume you should have access to anything you need to assess whether you are paying to a beneficial owner or not. If you are paying over 2 million, the due diligence should be even greater. So you should put really much attention to this payment. The important thing to mention is that you should apply, or you should investigate the structure or the motives or on the side of the tax recipient in every case. So it may be not sufficient, let's say, to assume that if you are paying to giant companies like Facebook or Google, you are released from this investigation. No, you should check every time you pay to a non-resident whether the structure is okay or is eligible to apply, let's say, a reduced withholding tax rate or a tax exemption where this is possible. Now, this is the environment this year. The next year, there will be a change around some formalities. So next year, every time you will have a counterparty, a business counterparty, to whom you are paying over 2 million zloty per year, and the amount sums up. So it means that you look at the payments realized within a year under any title being subject to withholding tax. So the 2 million means that you may pay, let's say, 1 million of a dividend, and then another 1 million of royalties or interest, and the next payment, which will exceed the 2 million, maybe a dividend, it may be an interest, maybe a royalty, or maybe even for intangible service, which exceeds the 2 million, will require you to process some formal requirements. Basically, you will be allowed to choose 3 possibilities. The first one is the most simple and is treated as a default possibility by the Polish Ministry of Finance. So it means that the basic rule says that you should deduct the withholding tax, pay it to the Polish revenue, and then ask your business counterparty to claim it back within an ordinary or regular refund procedure. It is being said that the refunds will be processed faster. There is a specific rule saying that it may be processed in a digital way, and should basically the whole procedure should not exceed 6 months, unless the tax authorities still have, after this period, still have some doubts which require additional explanations. Then the period may be postponed. So as long as the tax authorities are not clear on the structure, they are allowed to investigate it even in the period beyond this basic period of 6 months. Now, you may use some tools to facilitate the procedure. First tool would be to get in contact with a professional tax advisor and ask for upfront for an opinion which would certify or confirm that, let's say, the payment is eligible for a reduced withholding tax rate or for a tax exemption. It's not like that the opinion of the tax advisor is binding anyhow for the tax authorities, but on the other hand, it's clearly being said in the guidelines issued by the Polish Ministry of Finance that it may speed up the procedure, it may make it more simple, and let's say it should provide some transparency and clarity to the tax authorities. So every time you know that you are processing a significant payment, contact with your tax advisor may be something that you may want to do just upfront, launching the reclaim procedure. Now, these payments put some tension between the Polish companies and non-residents, specifically with regard to payments within the group. And specifically in those cases where the group feels comfortable with the structure. So they're looking at the market. There have been already developed, let's say, a couple of practical solutions how to work with the reclaims, because obviously, let's say, the payment recipient may be not aware how to process the Polish reclaim of withholding tax and not aware of all the procedural details. So I see some companies which decided that the plan would be to, let's say, deduct withholding tax, pay to the tax authorities, and then for the Polish entity to take the power of attorney and act on behalf of the non-resident to claim the withholding tax back. So this would be the basic possibility, and that this is, let's say, the least attractive from the business perspective because it requires an actual payment to the tax authorities. On the other hand, if you want to play that safe, that may be a way to go. And as I mentioned, there are some tools to make it a little bit less burdensome, to make it a little faster. It just needs a good preparation, and it needs to provide the tax authorities with some transparency and perhaps maybe some analysis upfront before applying for the refund. The next possibility would be to file a specific statement to the tax authorities, to your local tax office, which would confirm that, well, you decided to apply a reduced withholding tax rate, or you decided to apply an exemption from withholding tax because you have already investigated the structure at the site of the payment recipient, and you have already checked if the payment recipient is eligible for withholding tax exemption. Such a statement should be filed at the latest at the date the payment is processed. So it basically should be done before the payment. There's a detail here. Up until now, there was a custom that sometimes Polish companies paying abroad decided to collect certificates of tax residency after processing the payment. Looking at the technicalities now, that should not be, let's say, the correct way to proceed, because by filing the statement to the local tax office, you do confirm that you have verified not only the beneficial ownership, not only the principal purpose test, but also you met all the formal requirements to apply a reduced rate from the double tax treaty or maybe a tax exemption, whatever you decide. So all the investigations, all the documents should be collected before the payment, which from business perspective should impact your business processes. So since the rules come into force fully in January 2020, you may now think of maybe adjusting your processes a bit, adjusting the way you work with your business counterparties, just to make sure that apart from the necessary testing on beneficial ownership, or apart from the necessary testing from the principal purpose test, you are also provided with all the formal documents that you may need. In particular, as sometimes it happens that for the business counterparty is not exactly clear what sort of document you may require. Specifically, in some Arabic countries, certificates of tax residency may be very, very, very hard to get, or the documents you receive in the first place may confirm, let's say, a business registration, not exactly confirming the tax residency. So it would be important to reach for it right now and maybe adjust some processes. Now, on the statement, you should file one at the date the payment is processed, and you should file another one after completion of 3 months period. So the first statement that you do is to cover the next 3 months period, and by the end of this period, you should file another statement confirming that throughout this period you have not noticed anything that would be disturbing or that may raise doubts from the perspective of withholding tax. Now, on the testing that you confirm, you basically confirm that the payment recipient is the beneficial owner. And I think this is the most important point here, is that the Polish Ministry of Finance looks at the beneficial ownership testing as mandatory, not only with regard to interest or royalties, but also with regard to intangible services. So every time you pay for advisory, for example, then you have to look if your payment recipient is or may be treated as the beneficial owner, because if not, the intention of the Polish tax authorities would be to challenge that. And I know that the Polish double tax treaties do not provide for beneficial ownership clause within so-called business profits. So every time you pay for the service, up until now, double tax treaties were applied quite automatically. But looking at the guidelines provided by the tax authorities, they intend to challenge application of the double tax treaty every time they believe you are not paying to the beneficial ownership. And it's clearly being said that, well, it might affect some of the very popular business schemes, for example, cost pooling agreement. So every time you have a group company which receives charges from related and non-related parties and then recharges this payment, for example, in accordance with some allocation key dependent on revenue, well, such a structure may be challenged if the Polish tax authorities do not see any additional value in having such a recharging entity. So it's being said in the guidelines that they wish to, let's say, reach out and challenge the cost pooling structure where they see that the, let's say, pooling entity, so the entity absorbing the charges and then recharging, has no added value in the whole structure. So has no people, has no infrastructure to provide something extra within the services. It's also being said that the ministry would look at the aims and the goals of the structure. So it may be a way somehow to discuss with the tax authorities that such a recharging entity may bring some benefits in terms, for example, of procurement. But then again, looking at what's now in the withholding tax guidelines, it may be problematic for the major part of the market. Now, sticking to the beneficial ownership item around cost pooling, you have to be aware that it's being understood in Poland in a very, very specific way. So apart from the economic powers, which are usually discussed within beneficial ownership talks under, OECD guidelines, Poland has some additional items which should be an attention point for you. And such items are whether or not the payment recipient has employees, whether such employees are remunerated or not, how much of the functions of core functions of such a payment recipient is outsourced, whether or not the payment recipient has office space and sufficient infrastructure to process with the business or to add some value. So looking at the pure cost pooling agreements, this may be very hard to meet. So to be on the safe side, you should, as fast as possible, process with the necessary testing. Now, the third option, which is limited only, unfortunately, to payments which enjoy a withholding tax exemption under European directives. So I'm looking at parent subsidiary directive and interest royalty directive. Now, the third possibility is to reach out to the tax authorities upfront to confirm that you are eligible not to withhold the tax upon payment of dividend, interest, or royalties. So, as you see, this is very limited. Firstly, because the entities being the payment recipient are, well, limited only to certain positions of related entities. So a direct subsidiary, direct parent company, or a sister company. This is in the first place. Now, point two is that you basically cannot confirm that the structure is eligible for withholding tax exemption with regard to intangible services which may not be treated or qualified as royalties. So this is a limited possibility. It's good to think of it, however, if you are processing such payment now, because it's being said that the tax authorities have something like half a year to respond to your question. And again, if they feel unsafe or if there are any items left unclear, they may prolong this period. I know that some of the applications for the business have been already filed. I think none have been answered yet. But then again, looking at the fact that the rules will come into force in something like 3 months, it may be time to think of filing such a request to the tax authorities and to get the answer at the beginning of 2020 and to avoid filing a statement or payment of the actual tax. Now, I know that some of the entities on the market are struggling with regard to this opinion, whether to file it or not with regard to holding entities. Well, we still do not have final guidelines from the Ministry of Finance, but we have draft guidelines. And let's say the good thing in the draft guidelines is that the holding companies are basically allowed to enjoy whether treaty benefit or the benefits resulting from parent subsidiary directives or interest royalties directives, as long as they meet the specific criteria used by the tax authorities to say whether or not someone is a beneficial owner or not. So again, the tax authorities do not wish to fight or combat the holding companies. They do appreciate that in some circumstances it may be necessary to establish such a company. I would say typically within a joint venture with non-related parties, this should be, say, seen as something justified from the business perspective. But they still require the holding companies to meet the beneficial ownership test, the business substance test, and the principal purpose test. So as long as you are able to, let's say, meet those three, And just remember that the testing on substance requires to meet this Polish conditions, and then you should be safe. Holding companies, however, are for some time now subject to specific attention of the Polish tax authorities. There is a specific part of the Polish of the withholding tax guidelines which says in detail how the tax authorities wish to approach holding companies. There is still some unclarity after going through that, but basically there is much attention put on whether or not such entities, such investment platforms, have employees or not. Now, the interesting point around that is that the ministry, within the guidelines, confirmed that they wish to apply so-called look-through approach. So whenever you pay to a related or unrelated party, which does not meet all the requirements resulting from to be treated, for example, as a beneficial owner, but you know that the payment you have just made is passed through to another entity, the Ministry of Finance is willing to test that final payment recipient for the conditions to check if this final recipient should be or may be treated as a beneficial owner of the payment, and whether this another entity in the line could be eligible for withholding tax exemption. And this is something new. Up until now, our experience in tax audits showed that tax authorities were unlikely to apply such an approach. The rulings we have recently seen on the market are going back and forth. So sometimes you may get a confirmation, sometimes not. But you know, as long as this part or this confirmation around look-through approach will stay within the final guidelines, the guidelines should provide protection similar to having a binding ruling. So for now, they are still in draft. They are not binding, but as at the moment they become final, they will be binding. The practical solution around that may be in the meantime to maybe reach out for a regular ruling to confirm whether such a look-through approach may be applied or not. And then if you receive a binding ruling, that would be a way for you to secure yourself in case you are processing the payment before the guidelines become final. For now, there is no clue that would allow me to say when we can expect the final guidelines. So this is more or less how the withholding tax rules will look, how they are applied in or to be applied in practice. I think that the main takeaway from that should be for you that these rules really may impact your business, even if you are functioning with a well-tested structure. For example, this cost pooling structure, this recharging within the group, with regard to any cash pooling that you may have on the table, that will be also, let's say, an attention point for the tax authorities, and with regard to any joint venture entities or investment platforms or holding companies that you may have within your portfolio. Now, besides the rules on withholding tax, we have notional interest deduction rules, which is basically a good news. Basically says that if you are financed by equity, not debt, you are allowed to some deemed deductions. This is let's say a solution known to other jurisdictions, for example Luxembourg. Now it's coming to Poland. This is strictly limited to 250 zloty per year. So a very limited rules. And this is coming into force starting from 2020. You have to remember that along with these rules, there will be some new rules on anti-avoidance. So every time you are planning a structure only to get advantage of this rule, you may be banned by the tax authorities if you are not able to explain to them why exactly you have founded a structure in a particular shape. Yeah. So apart from the general anti-abuse rules, you will have, let's say, a separate anti-abuse rule around the notional deduction, which basically does not exclude that the tax authorities may still apply the general anti-abuse rule to your structure. So it's overlapping. The rules are very similar. It's basically about explaining a business rationale of particular decisions and providing the tax authorities with comfort that you have not established a particular shape of structure to get an advantage of let's say this additional deduction. Now, what's more coming is also on anti-avoidance rules. So we have 8 directives, 8.1 and 8.2. 8.1 Poland has already, I would say, implemented in full. So starting from 2019, we have this exit taxation. We have changed CFC rules. An important point around changes in the CFC rules is that looking at the provisions we have now, well, entities like foundations or trusts are covered by the CFC, which was not, let's say, the rule beforehand. We have slightly changed our general anti-abuse rules. In particular, they may now be applied also in those cases where there's specific provision addressing anti-avoidance with regard to particular payments. So, for example, if you are paying a dividend, you have to face some mandatory testing and some anti-avoidance rules. But then again, it does not exclude the situation that the tax authorities will apply GAR. There is a new rule saying that you may face additional penalties in cases where the general anti-abuse rules is applied, and this is suffered by the companies. Your tax liability may be increased, and the same applies to missing, let's say, mandatory deduction of withholding tax. Now we have those new rules which are being processed now by the Parliament, which are basically an implementation of 8.2 Directive. So this will be the new rules. They are basically aimed at targeting the structures with hybrid mismatches, which means that it should cover all the entities which are, for example, which have double tax residency, which sometimes happens. But within the European Union, it should be handleable because there are tiebreaker rules. But in some territories which do not have, say, a double tax treaties with Poland and those tiebreaker rules, it may be a problem. Within the group payments, you should also check whether or not you are deducting anything that is, let's say, not treated as a taxable revenue locally, because such a deduction may be questioned by the Polish tax authorities if they find out about that. So it really requires you to track, let's say, what is the tax treatment of your payment recipient, which is also the case under the mandatory reporting rules, so MDR and the Polish implementation of DAC6. And I will mention that because I see that as a practical problem on the market. Basically, the Polish tax authorities require you to know, at least with regard to related parties, how your payments are taxed locally. Yeah. With regard to strictly to 8.2, you are obliged to check whether, because of some mismatches around tax treatment of a particular payment, there is a risk that your deduction is not treated as a revenue within another jurisdiction. Another situation covered by these new rules is where a particular entity is treated as tax transparent but non-transparent within another jurisdiction. So these mismatches around treatment of a particular entity may be treated as something that may ban your tax deduction. Some sort of, let's say, hybrid instruments, some financial instruments which may provide for a double deduction or for a tax deduction in Poland, which is not treated as a taxable revenue in the jurisdiction of the payment recipient, may be also addressed by those rules. So let's say the practical takeaway from the ATED 2 implementation in Poland is that similarly to MDR and DAC 6 rules, you have to keep a good track on what's happening within the group, and just investigate what are the rules of taxation applied in particular jurisdiction. This becomes very this is becoming a very urgent and very important issue from the perspective of the Polish tax authorities, to know how the payments are treated at the hands of the payment recipient. And as I already mentioned, the practical approach of the tax authorities within tax controls is that you should have a very good understanding of the rules of taxation applied by related entities. The tax authorities really assume full transparency here. You may not investigate if you don't know with regard to unrelated parties. So a specific point of attention, which I see within the MDR rules, which I see within withholding tax guidelines that are still in draft, but still show the intentions of the Polish tax authorities, and which I see in the actual tax audits that I face in Poland, is that you should put much pressure on any group payments. And now over to Marcin, which is to cover the transfer pricing.
Okay, thank you, Michał. The next points we'll be discussing will be around, first of all, cooperation with group entities, then secondly, cooperation with tax authorities, and then the corporate income tax and VAT relation with respect to whitelist. So first of all, there are some changes in the Polish APA's advanced pricing agreements regime. These changes are mainly formal, which is to say that the whole division or the whole regulation regarding APAs is being transferred from the tax ordinance to a new bill, new act of law, which will comprehensively cover all the procedures or the international procedures of agreeing prices between different jurisdictions, be it the process based on the arbitrage convention, MAPs, and APAs as well. So the Polish authorities have decided that this is a little bit confusing to have all these regulations regarding international cooperation between various tax jurisdictions and the taxpayers located in these jurisdictions, that it's confusing to have them in different acts of law. So there will be, or there is a new act of law being processed right now that will cover all of these procedures, and we decided to have a more in-depth look at the APA during our today's webinar, because it has been a tool which has become much more popular in the recent year and a half. This is, of course, due to the fact that it has a connection and it has an impact on the deductibility of intangible service charges. As you might be aware, when intangible service charges or royalty charges or these types of charges are covered by the APA, they are not subject to the deductibility limitation, which has been introduced at the beginning of 2018. This regulation has resulted in a flood of APA applications from the Polish taxpayers towards the respective competent authority, and the ministry is dealing with these applications right now, and there are really a lot of them, and we are also cooperating closely with a lot of our clients with respect to APAs, which were triggered basically by the fact that they can allow for deductibility of a significant portion of intangible service charges. What is being changed are some intertemporal provisions. Basically, as the regulations are right now, if a taxpayer receives an APA within the year 2019, They can also, from the perspective of deductibility of these intangible charges, they can also treat the charges for the year 2018 as tax deductible. So this is a significant benefit, of course, but the APA has to be concluded by the end of 2019. What will change in the regulations is that there will be no backwards looking applicability of the APA unless it is filed by the end of 2019. So basically, if there is an APA filing by 2019, according to these new, very new draft regulations at an early stage, if there is a filing by the end of 2019, there is still a chance to save, let's put it this way, to save the costs of 2018. However, if there is a filing in 2020, the APA will apply only to the costs from 2020 onwards. So this is I think an important change, a change on which you can think of taking some action still right now, still until the end of 2019, because this is the area where some costs can still be saved. And this is, I think, from the practical perspective, apart from the theoretical or technical movement of these regulations between different acts of law, from practical perspective, I think this is the point that needs to be raised, needs to be mentioned. The other change, which might be significant for new investments in Poland, the other change in the APA regime, is that it will be right now possible for a foreign investor to apply for an APA, to agree with the ministry the pricing mechanisms even before an investment is started in Poland, even before a Polish new co starts to be operational. So these are the two key changes in the APA regime, apart from the formalistic one. And of course, if you have any more questions regarding that, please contact us directly or via the chat right now, and we'll try to answer your questions. The next thing, I think, is the one that will take the most of the time that we have left, because this is a new tool, a quite interesting tool, and a tool showing that the Polish Ministry of Finance is really moving forward with the times, as we have seen for the last couple of years. Cooperative compliance, also in some jurisdictions called horizontal monitoring. It's an institution where basically a taxpayer is very transparent with the ministry, is open about its tax practices, and on the other hand, the ministry treats this taxpayer as a particularly trustworthy entity and confers some benefits on this taxpayers, resulting from their cooperation, resulting from their joint actions regarding the tax obligations, the fulfillment of these obligations. So basically, if a taxpayer is open and transparent with the Ministry of Finance, the Ministry of Finance expresses more trust towards the actions of these taxpayers, and there are some benefits to be had as a result of this type of cooperation. This is, of course, the general, let's say, global principle. This type of cooperation has been introduced in several jurisdictions within the EU, the Netherlands, for instance, Spain, France, and it has been taken up by some taxpayers in these jurisdictions, some multinational entities as well. We'll of course see in what way this particular mechanism works or starts to work in Poland. Right now, again, this is a very early stage of the legislative process, and the planned introduction is for I think right now July 2020. And not only that, but also after the introduction of these new regulations, in whichever shape or form they take, the ministry plans to have a 3-year-long trial period, during which there will be no more than the way it's planned right now, no more than 20 entities which will be able to participate in this cooperative compliance with the ministry. I guess to see how it works, to work out the details, and before this type of process is applicable more broadly. The general principles of this cooperation are that it is only applicable for larger taxpayers with turnover above 50 million euros. It is also conditioned upon very, at least the way it's written right now, very thorough examination by the Ministry of Finance before such cooperation contract, such cooperation agreement is concluded, where the Ministry of Finance and the competent authorities will review the settlements of the taxpayers in all areas of taxes. But not only that, what will also be carefully monitored and reviewed, and this is also very, very important because it shows in my view at least, the more modern approach of the Polish tax authorities. What will be reviewed are also the processes, the controls, the procedures which govern the payment, processing, and handling of taxes in a given entity. So not only the particular or the mathematical correctness of tax settlements, but also the way taxes are done, the way taxes are handled, what taxes mean to the entity, what type of processes, what types of staff, what types of controls are implemented in the entity. These are also the elements that will be reviewed by the ministry, and only upon such careful review, the ministry will be able to say that a given taxpayer is eligible for this cooperative collaboration. And this should allow, in principle, for some benefits in hands of the taxpayer. These benefits are introduced in these regulations. However, it might be said that they are not as pronounced as one could wish. Typically, what can result from such cooperation agreements or from horizontal monitoring are some tangible benefits, like lack of tax controls in other jurisdictions, or lower penalty rates for tax arrears, etc., or some other preferential treatments. Right now, there are some benefits introduced into these regulations. However, to what extent they will be attractive enough for taxpayers to approach the Ministry of Finance, the Polish Ministry of Finance, with full transparency remains to be seen. And again, we of course have to wait for the final shape of these regulations to be sure what we are dealing with. However, since this is a particularly interesting and new mechanism, we would like to ask you a question. To what extent do you think that this type of tool will be attractive to you? To what extent do you think your capital group globally will find this type of solution in Poland as something that is worth testing? So basically, we have a question. We have a question for you around that, because this is something new, something that has not been practiced in Poland yet. And on the other hand, it shows that the ministry is moving forward with the times and trying to use all the tools that are available. So the question we have is basically, what would be your approach, your group's approach, your headquarters approach, or your approach here locally to this type of tool? Again, our feeling is that right now the ministry is very clear on what it requires from taxpayers, what type of openness, what type of reporting within this area in this tool. However, the benefits are, let's say, a little bit muted right now. So it remains to be seen whether this is actually a good idea for a lot of taxpayers, but still, perhaps given the global practice of some of the multinationals present in Poland, this is something that can be utilized in the future. Yes, Michał, you wanted to.
In the meantime, I have some questions coming over from the withholding tax perspective. So maybe I will address one or two. Well, the first question is around how to behave if you are processing a payment and you know that you are not paying to the beneficial owner but to let's say a pass-through entity, but then again you are aware that the actual beneficial owner is let's say residing in the jurisdiction where a double tax treaty could be potentially applied. Again, there are some differences in the practical approach that we see is applied by the tax authorities in course of actual tax audits and the draft guidelines provided by the Ministry of Finance. So the practice of the tax authorities that we observe in course of tax audit is to not allow such a payment to enjoy preferential treatment. So the current state point, at least in the controls for 20. You are not paying to a direct beneficial owner, then you should apply a 20% domestic rate. Now, looking at the guidelines provided by the Ministry of Finance, you should be allowed to apply a look-through approach. So you may treat the actual beneficial owner as the payment recipient, and then you could apply double tax treaty that is applicable between Poland and the jurisdiction where the actual beneficial owner resides for tax purposes. But then again, I have not seen such an approach applied within the actual tax control. So my advice to you would be either to wait for the final guidelines when they become binding, or to apply in the meantime for a binding ruling, individual tax ruling, to secure your position around the look-through approach. You have to be aware that not every double tax treaty allows such an approach, because some of them have some specific conditions, so they require a direct payment recipient to be the beneficial owner as well, and those specific treaties, let's say, would not allow literally to apply the look-through approach. The interesting thing in the guidance provided by the ministry was also that they are okay with applying, for example, the parent subsidiary directive if you are not paying a dividend to the beneficial owner. So this is a little bit contralegem, but it seems that the intention of the Ministry of Finance for the future payment is to allow the look-through approach. And I know that we have the results of the question, so up to you.
Okay, thanks, Michał. Indeed, the results of the poll are visible right now, and I think it could have been expected that the majority of the respondents to this question think that, at least as of now, the way I would interpret it, as of now, this is not the most attractive tool to be used, and they are not even considering this type of cooperation with the Ministry of Finance. However, there are also some, although there's a limited amount of these entities, there are also some entities which could quite consider it. So I think it's worthwhile to wait on the final details of these regulations and see whether there are some more tangible benefits offered by the ministry at the further stages of the legislative process. Okay, and I think the last thing that we will be very briefly discussing, because the time is almost up right now, is the fact that should also be remembered that although there are major changes in the VAT regulations starting from 2020, or in fact starting basically each quarter, and some of them have already been introduced from the 1st of September. Namely the so-called white list, so basically a list of taxpayers and their bank account numbers, where if another taxpayer is paying to these bank accounts, to these taxpayers, and these accounts are present on the list, which resides at the Ministry of Finance and can be accessed by taxpayers, these payments can be treated as tax-deductible costs, and input VAT on those payments can also be offset against output VAT. So basically, this is just for you to remember that not the whitelist provisions refer not only to VAT provisions, but also to corporate income tax settlements. So all of the doubts around whitelist which are present right now, because the regulations are already in force, although sanctions will be applicable from the beginning of 2020. All of these are also applicable and relevant for corporate income tax, and this is something worth remembering. Okay, I think right now we are very close to the end of our session today, and as you can see, we have barely been able to touch upon all the items listed, and we haven't been able to have a more in-depth discussion or in-depth presentation, because there are a lot of areas and a lot of issues that still have to be covered. So we would like to welcome you first of all to the next series or the next episodes of our webinars, be it in English or in Polish, as well as, of course, we would like to invite you to contact us, to contact your PwC advisors and discuss these items. The presentation and the recording will be available on the websites listed in the chat. So I think right now we will be happy to thank you for being with us for this past hour, and looking forward to the next meetings or webinars or calls, etc., etc. Thank you.
Thank you.